What kind of fund was Magellan? They ask. It was a small, aggressive capital appreciation fund. Magellan Fund basically started in the early 60s. In the name, it was an international fund, but right after it started in 1963, they put sort of a barrier and a heavy tax on foreign investing. It's like so crappy. You like build an entire company to make an entire fund, and then the government just changes the taxes, and you're just like, okay. It had the ability to invest internationally, but there was very little interest then. There was a big penalty. So even though it was a Magellan fund, it was primarily a domestic fund. And when I took over in May of 77, the fund was $20 million, which is crazy because in a minute here he mentions how big it gets. $20 million for an individual is a lot of money, but for a fund is very not a lot of money, even in the 60s, I think. And that was your first portfolio managing job? And he says, yep, that was my first portfolio managing job. I was a director of research in 74. I still continued to be an analyst. And then in May of 77, I took over the fund. But the market really didn't do much between 77 and 82. Between the beginning of that bull market, and yet your fund performed quite spectacularly. What did you do? So the interviewer is like, dude, you just mentioned how the market sucked from 1977 to 82. How did you guys get good returns during that time? He says, well, I think flexibility is one of the key things. I would buy companies that had unions. I would buy companies that were in the steel industry. I'd buy textile companies. I always thought there were good opportunities everywhere and researched my stocks myself. Taco Bell was one of my first stocks I bought. The people wouldn't look at small restaurant companies. So I think it was just looking at different companies. And I always thought if you looked at 10 companies, you'd find one that's interesting. If you looked at 20, you'd find two. Or if you looked at 100, you'll find 10. The person that turns over the most rocks wins the game. And that's always been my philosophy, which is super interesting. He's basically saying, just keep searching. And if you search through 10 companies, you'll probably find one decent one to invest in. I don't know if he's necessarily saying 1 in 10 companies is a 10-bagger. I don't think he's saying that. He's just saying during this rough kind of sideways, slightly downward market between 77 and 82, he just kept searching and he found enough companies that were growing, even though the market overall sucked, which is fascinating to me. Right now, the last few weeks, we're starting to see kind of a lot of green, after a period of a lot of red. But I couldn't imagine if everything just kind of was just like bleh, going down 30% over 16 years like it did. So that's fascinating to me. Again, welcome to the channel, guys. Let me know where you are at in the world. We got New York City. We got Italy. Moonboy, I think, is on the Australian East Coast. Where you guys at? Talk to me. That's why it's a live stream, guys. While you're talking to me, I'm going to have a drink of water. Chart the growth of the fund in the 80s, just for chronology. Well, the fund was not very big in 1982, even though I had ran it for 5 years. And oh sweet, Oren's in Scandinavia, very cool. I did not know we had viewers in Scandinavia. And Charlie in Orlando, Florida. Welcome, Charlie. Very cool. Thanks for your comments, guys. So, tell us about the fund's growth in the 80s. So I'd run it for 5 years, and in 80 to the end of 82, when the market really started to come in and people started to look to the future, I think it was April of 83, it passed $1 billion. So he had moved it from 20 million up to $1 billion at this point. That was a big number. I remember that number has a lot of zeros, and it's kind of a magic number. So I remember that point, and people just continued to be interested in the stock market, and there were lots of individuals coming in. This was not people putting in 4 million at the time or 3 million. It was lots of $2,000 and $3,000 and $5,000 investments coming in, and it was steady. It wasn't a torrent. It was just there every day. So the Magellan Fund was growing into name, and more people were just kind of putting in $2,000, $3,000, $4,000. And the fund was growing. Yeah, and this next question, it's a little bit confusing. But Yeah, so he was talking about, so the Magellan Fund started to grow in popularity, and the question came up on the show Jeopardy, the quiz show, and he says, I never really watched it. My wife did though. And there was a question, what's the fund that was named after an explorer? And all the people, they all hit the button at the same time on Jeopardy, and they all knew it was Magellan. So I guess it became more famous then. And there wasn't that much coverage. I mean, today I think Wall Street Journal has 3 full-time reporters covering the mutual fund industry. They had none in the early 80s. So the coverage was really basically Wall Street, Louis Ruckhiser, Barron's, a little bit of the New York Times every quarter. Every quarter, you would get a little bit of information on this fund. There was not coverage of the mutual fund industry. It was really coverage of stocks. And, occasionally Forbes or Fortune or a periodical would write an article, but there really wasn't very much interest even in the 80s. And that's fascinating. And that's very much the opposite of what we have right now, where there are like 1,000 YouTubers talking about every single stock you can imagine, with like up to the day information too, and a million different publications as well. So much so that I feel like it's overbearing at times. It's like, dude, there's too much to think about.